that down for us. But now let's trade it. We got Tim Bigham, option strategist at Pilot AI. Tim, as Marley stated, this stock is elevated at this point near record highs. How do you want to look at this from a trading perspective? Because this is one of those stocks that bifurcates, whether it's analysts, investors, traders. What is your take here?
Yeah, I am, I guess, cautiously bearish, not looking for any time of big pullback here, Tom. Just really kind of playing the fact that we're looking at IV levels that we have not seen in a very long time, which means option prices are cheap both on the call and put side. IV last I looked at the 4th percentile, so certainly getting very, very cheap. The stock having trouble getting through that 500 level. It was up here last December about this time, and if you look at the comparably priced puts, they were trading at basically twice the price they are now, simply because IV was elevated above the 70 IV level, now around the 40 IV. So I'm just looking really for a slight pullback towards that 20-day moving average, going out buying the traditional January 450 puts, selling next week's 450 puts to kind of hedge off, take a little bit of the price down on it, paying a little bit over $5. And really, again, I think Tesla, it's a 1.6 trillion market cap again, maybe 2 million deliveries next year, which would put my kind of valuation metric at 800,000 per each car delivery for next year, which I think is a little extreme here. I understand they have other businesses, so I just think Tesla's probably due to put it in reverse here, given that kind of red hot rally. All of the gains for the year pretty much happened in the past month or so.
Yeah, and Tim, looking at strategies like this, it gives you some downside exposure. It's still risk defined. You're paying, roughly about $5.50 debit for this on this one. Now, you can see here from your risk profile, Tim, apex of profitability at or near that 450 strike, but you still got a pretty decent range on this one. Maybe 425 on the downside, 480 on the upside to become profitable on this type of 2-week wide put calendar.
Yeah, absolutely. I mean, you don't have to have it, as you alluded to, Tom, settle down right at the 450 level. Plus, if the stock just kind of even goes up a little, you've got 2 more sets of weeklies to chop wood, as I call it, to sell additional premium against that long January 16th option. So kind of like it on that front as well. I'm long vol, too. I don't mind buying vol at the 4th percentile at any stock, especially Tesla. So I think all you need is that bad hair day somewhere along the way to turn this trade into a profit.
Yep, you mentioned the potential for those rolls or adjustments on that short strike as you get closer to expiration over the next 10 days. And you made a great point here, Tim. Whenever implied volatility levels are in the bottom 5% level of what we've seen over the last 52 weeks, these become cheaper when you're buying them because that's the risk on these type of positions. And if the stock does go down, you'd expect volatility to ramp up a little bit, and that would expand the price of this calendar also. All right, great breakdown for us, Tim. Appreciate it. Have a great holiday season. That's Tim Bigham.
You too, Tom.
Yep, that's Tim Bigham, option strategist, Pilot AI.